Look, we are in the midst of the final dump before the next leg up, and I think the bad news is that I think it's going to get a little bit worse before it gets better, but the good news is that when it does get better, we actually are free to go into the next step of the bull market. But as I said, right now, I do think that it is going to get worse, and I think there is going to be a little more pain ahead. And really what your only job is right now is to actually survive this and to make sure you don't get wrecked in this last flash out. What I want to do today is I want to show you how long I think this is going to last, and I want to show you what is going to make this market turn, and basically I want to show you how to survive this to make sure that you can actually be around for the next step of the bull market. This is a big show, one that you absolutely don't want to miss. And if you're not, let's get the show going, guys. You know, the crazy thing is that I've been speaking to people who survived the entire bear market. Literally, guys that survived all of this from 65,000 all the way to this, and they're getting scared by this dump, and they're getting shaken by this dump. And I think it's so important that you have perspective and that you understand where we are and that you understand that this is really the last flush out before we get the next leg up. I'm going to show you exactly when we're going to turn. I'm going to show you exactly what's going to cause us to turn. And let me tell you, it's not actually the inauguration, which everybody thinks, but I'm going to show you what it is. So if that sounds good to you, obliterate the like button. Also, if you're not already subscribed, you know the story, just subscribe to the channel. We are trying to get to 2 million subscribers by the end of this year. We can only do it with your help. Otherwise, let's get into the alpha, because there's lots of alpha that we need to talk about. I think let's start off by actually looking at Bitcoin and where we're at. So we are currently, as I said, in the midst of quite a brutal dump. I mean, this red candle doesn't do it justice. Maybe if we go into the 4 hour, it makes it look a little bit more like what people are feeling out there. We're starting to get max fear. We're starting to get a lot of movement out in the market. We got liquidations. So far, we've had 544 million liquidations. But remember that this brutal candle only started like 4 hours ago, 5 hours ago. So probably in the next part of the 24 hours, we're going to get a whole lot more liquidations actually happening. And the reason why all of this is actually happening actually has nothing to do with crypto. It's actually because of what Michael Arrington calls the dollar wrecking ball, right? So what's happening is the Dixie is gaining huge strength. And in fact, it tagged 110 on the Dixie. So what you have is you have a scenario, it actually tagged 110.133. What you have is you have a scenario where the dollar is getting stronger. And as the dollar gets stronger, it's hurting risk markets. You can see that the QQQ, which is actually the Nasdaq, is actually down in the pre-market 1.19%. It's actually, the markets will open in about a minute. But you can see that the Nasdaq is down about 1.19%. And what you can see is that the 10-year treasury yields, the rates in the 10-year treasury yields are now back at 4.8. And so what this market is telling you is that this market is petrified. This market is scared of inflation, unfortunately. It's scared that the economy is too strong and that inflation hasn't gone away and that the Fed started the Fed pivot basically too early. And that's what the market's actually very scared of. And the problem, when it comes to inflation, right? When it comes to inflation, the problem is that we have another problem this week. And the problem that we have this week is that we have the CPI numbers, which are coming out on Wednesday. Now, the last CPI numbers were 2.7%. That's what we got for the November CPI, which was published in December. We got 2.7%. Right now, the forecast for the CPI for this that's coming out on Wednesday is 2.9%. The issue with that is that it's a lose-lose situation. And the reason why I say it's a lose-lose situation, because even if we hit the forecast of 2.9%, the market's still going to say, hold on a second, we went up from 2.7%. Therefore, inflation is back. And that may spook the market. In the worst case, we actually land up above the 2.9%. If we land up above the 2.9%, then I think what happens is we get the last smack to the markets around Wednesday before the actual turnaround. But I do think that we're going to get a lot more pain this week. And this is not unusual. In fact, for the last couple of CPI readings from August, September, October, and November, Every time we've had CPI, in the week leading to CPI, we've actually had the markets actually go negative and Bitcoin actually go negative. And then what usually happens is once the CPI is published, the market digests it and we start moving back up again. And so I think that the market is very, 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 very scared of inflation, as it should be, because, as I say, the last inflation readings were 2.7%, and the forecast right now is 2.9%. Now, what you'll remember is that there is the Cleveland Fed, and the Cleveland Fed are actually very, very good at forecasting inflation. They are currently forecasting inflation at 2.86%. So 2.86 effectively rounds up to 2.9%, which is exactly what this figure is. I think in the best case scenario, we get a 2.8. If we get a 2.8, I think the markets breathe a sigh of relief that inflation is not heated. I think if we get 2.9 or above, or anything above 2.9, the market starts to panic that inflation is coming in. And the problem with inflation, I said there's some bad news. There's also another piece of bad news. And I'll tell you the other piece of bad news. The other piece of bad news is that we had the PPI come in, right? So the PPI came in, and the PPI came in hot. Now, what is the PPI? The PPI is Producer Price Index. Producer Price Index is the price that producers are paying. In other words, people that produce goods. So take for example, this plastic bottle, right? There's a company that manufactures the plastic bottle before it actually gets to the shelf, right? And the PPI came in hotter than expected. Now, what does that mean? Not only did the PPI come in hotter than expected, but the PPI for October was actually revised higher. It was revised higher from 3.1% to 3.4%. Now, let's just go back and think about the goods that were produced in October, or the goods where the producers paid for the raw materials in October probably hit the shelves in November, right? Because you'd imagine that this bottle was probably started to be produced in October. By the time it was filled with water and actually got to the shelves in November, that inflation is probably going to get measured in December. If that PPI was revised up by 0.3, I find it very, very, very hard to believe that we're going to get like a positive inflation surprise. I don't think that we're going to get, when I say a positive inflation surprise, I mean less inflation. I can't see a world where this week we get inflation numbers which are lower than the market expectations. And so for me, the best case scenario is that we actually land up on this 2.9. 2.9, we all breathe a sigh of relief and we say, you know what? It is higher, but it is per analyst expectations, and the market breathes a sigh of relief. If we get above 2.9, then hold on to your horses and make sure that you don't have a lot of leverage, because then we're going to get the one final flush out before we actually get onto the next leg of the bull market, which is going to be the most fun part of the bull market. And that's why I say right now, all you have to do is survive. And we'll talk about survival at the very end of the show. The issue with this, with all these inflation numbers, the big issue with all these inflation numbers is that these inflation numbers are not standing in isolation. These inflation numbers are coming at the same or just after a week where we had increased jobs openings. Remember that was last week. We had the increased jobs openings. We had the ISM manufacturer index jump to 54.1. And that's basically telling us that the US economy is heated. And a heated US economy is going to cause inflation. It's almost inevitable that a heated US economy is going to cause inflation. And that is why the market's panicking right now. And in fact, the market's panicking so much that we're starting to get headlines that look like this. We're getting headlines that say Bank of America is changing its Fed forecast to say the cutting cycle is over. So now people are saying it's not where we were in September, right? Because where we were in September, and I mean, September wasn't a long time ago. In September, in the Fed, in the FOMC, in the Fed meeting, the Fed officials had the consensus that there were going to be 100 basis points rate cuts in September, in 2025, which basically means that they were expecting 4 rate cuts in 2025. Fast forward to where we are today, the last Fed meeting said that 4 was actually going to become 2, And then after all of this economic data, remember that was before all this economic data. Now, with all the economic data out, people like Bank of America are saying that the rate cut cycle is actually over now. If we look at the Fed expectations, if we just look at these Fed expectations, or the market expectations, the market is expecting the Fed to only have 125 basis points rate cut next year. So the base case is that interest rates don't move until June or July next year. And in July next year, at the FOMC meeting, the Fed reduces interest rates by 25 basis points, and then there's going to be no more rate cuts. And that, my friends, is right now what's spooking this market. That is right now what's sending this dollar on a tear, because the market's saying, hold on a second. If rates are going to be higher for longer, we actually want to be in US dollars so we can put the US dollars into interest earning products. And as you can see right now, the market's crashing on that. I mean, you've got the Bitcoin under $90,000 right now as we speak. You've got the S&P 500 also taking a big smash. In fact, if you look at the S&P 500, the S&P 500 has given up and now is below where the election day was. So now the S&P 500 is below election day, believe it or not. And the same thing for the Nasdaq. So if you look at the Nasdaq has now opened. It's 1.33% down, and it has gone to levels. So that is the 5th of November. It is now at the election day levels. So traditional markets have actually given up the entire gains, the entire excitement of Trump coming into power. You can call this thing over here the excitement of Trump coming into power, which took the markets up 7.99%, which doesn't sound like a lot, but when you're talking about like world markets, 8% in the span of a month is a lot. But now the markets have given back everything, every single bit of those gains. And what the markets are telling you is that they don't believe that Trump coming in these macroeconomic conditions can make the difference that they thought Trump would be able to make. They're saying that Trump is hamstrung. Trump won't be able to deliver on the growth plans that he actually has got because inflation is so high, and therefore interest rates are going to remain high. And so what you have right now is you have the S&P 500 touching its bull market support bands. That's like quite big. Like theoretically, when it breaks down below its bull market support bands, you can kind of say that for the S&P 500, the bull market, it's trading under the bull market support band, which means that it's no longer in a bull market. For Bitcoin, the scenario is actually different. And here we need to actually be a little bit grateful, right? If you go to Bitcoin from the election, I've marked it off here, whereas the traditional markets have actually given up all their gains, Bitcoin still has quite a lot of gains. You can see as I was prepping for the show, here it is. So you can see that Bitcoin is now still giving us 30% gains that we've actually held onto. Now, there's two reasons why this could have happened. The first reason why this could have happened is because Bitcoin is acting as a store of value against inflation, as a digital gold. And if you look at where gold is, gold's actually, I mean, I haven't looked at it today, but I'd imagine that gold's actually pushing all-time highs or very close to pushing all-time highs. Like I said, slightly down. But still, it's a 2666 versus 2695, which is recent highs. So one could mean that Bitcoin is actually acting like gold. Actually, this is a very encouraging sign, because what this shows is that investors are running away from everything except cash. Investors are scared. Investors are not going into cash. They're going into USD and they're going into T-bills. And that's pretty much what's going on here, right? Also, I mean, for Bitcoin to go down to bull market support bands, you're looking at somewhere between 79 and 84,000. So still quite a way to go down for Bitcoin to give back all its things. And so where are we now? Effectively now, we are at a point where the markets are finally scared. This is not a true reflection of where the fear and greed is. But when you look at this gauge in 9 hours and 20 minutes, be careful reading fear and greed, because a lot of people I see read the fear and greed, but forget to tell you that it updates in 9 hours, and a lot changes in 9 hours. In fact, so much changes in 9 hours that I'm actually willing to bet that this fear and greed goes below 50. Last week, it actually went to 50. I think that this fear and greed actually goes to below 50 when this changes in 9 hours. Let me know in 9 hours. Come back to this video and comment on this video and let me know if I was right. And as I've said before, a million times, for me, I need this fear and greed to go down. I need to smell fear in the markets. And despite everything in all these corrections, we haven't had fear in the markets. We're starting to get fear now. In fact, I think for now, we're going to get the fear here. I bet you if I look at the stock market, let's look at the fear and greed, CNN fear and greed. If we look at the stock market fear and greed, they must be in extreme fear. Okay, they're very, very, very close to extreme fear. And I reckon when this changes, they're going to get to extreme fear. You need the markets to actually be in extreme fear. And so what you have here is you finally have the markets getting into extreme fear. You're getting a lot of market selling and you're getting a lot of shorts actually aping into the market. So what we're seeing now is we're seeing a complete reset of the markets. The longs are turning into shorts. And what you have here is you have the funding rates actually turn negative. So if you look at the funding rates on ETH, for example, right now on Bybit, if you are long ETH, you're actually getting paid too long. You're actually getting paid. Funding rates right now are actually negative. This is what you call a reset. This is a crypto reset. We're in the midst of a crypto reset. And when you have another leg up, you need a reset. In bull market corrections are not only about prices going down. Corrections are about emotions resetting. It's about a complete reset and a complete rethinking of your investment strategy. We'll talk about that at the end because that's really where I want to go with this whole thing. In fact, this is such a reset that, as Dan Crypto says the last time Bitcoin and ETH funding rates were this low was in August, and it was surrounding the yen cash and carry trade. That is how much. Remember how scary that yen cash and carry trade? We thought the entire Japan was going to unwind and fall on our heads. Well, that is the last time that markets were this scared, and we actually got. And when that happened, I mean, let's just go back to August. That was the beginning. So let's just go back to BTC USD, and let's go to August. Okay, so if you go to August, this was the last time that, oh man, I'm on the 4 hour, no wonder it's taking me so long. Lucky I wasn't on the 1 minute, I would have been here for 3 weeks. So in August, here, this is the last time that the rates, the funding rates were this reset. And when you look at the funding rates being this reset, what you can see is that you can see that was the reset. We went down, we went from 31. Oh wait, I'm looking at the wrong year, man. Hold on, here we go. It's this August over here. So we went here, we went from, you could say from 73, and we went all the way down to 49. And that was when the funding rates reset, and then we doubled from there. And so that is effectively what the rate reset actually brings in. And so now we're in the midst of this complete reset. The longs have turned to shorts. The funding has turned from positive to negative. Generally, negative rates don't last very long in the crypto markets. And I've just seen another side. When I look at the markets now, we've had a massive reversal. Did you see that? We dipped all the way down to 89,212, and now we've reversed back to 91,400. That is actually quite a positive sign. It means that people have been flushed. And I kind of think that if we go back to the funding, let's just quickly go back and see the funding here. I reckon we just flashed out some more. We started the show, 500 million had been wrecked. And I told you, I think more people are going to get wrecked. And now $679 million have actually been wrecked. And so now you can see that we are really, really, really in max pain. Just look at this week. This week, virtual protocol is down 42%. I mean, I don't care who you are, 42% is a hell of a lot. It's a lot. And so it looks like we're finally getting this correction that everybody's spoken about. CZ was calling it down to 85. I must say my level was between 80 and 85. And I've stuck to that kind of like with conviction the whole way. I even took 𝗲𝗓𝗘𝗡, or I wanted to take 𝗲𝗓𝗘𝗡. He decided not to actually take the bet. But I took him a bet that I think one of us would have to stream in a Speedo. I wanted to take him a bet. I said we'd go under 80. I don't think we're going to get to under 80. I think around 85, given the fact that we've just been to 89, is probably a good place to go. And to be honest, it doesn't really scare me. The reason why it doesn't scare me is because of this tweet. It says, the average Bitcoin drawdown this year is 8.9%. In the current consolidation phase, it stands at 12%. And during the previous consolidation phase, the maximum drawdown reached 26%. So this is not a real correction. It's starting to feel like a real correction, but it's not really a real correction. And to be honest, I don't really think that we'll get down to close the CME gap to about 77.8. So I kind of think that we will, Fefe has been teasing me because I kept saying internally it's going to be 85K. I thought I replied to this. I was going to say to him sometime before end of January. Here we are. And I think we are heading probably around to this 85K. The other thing that we should probably take note of is that one thing that I said quite a while ago is I said, the problem is that this market is being maintained by Michael Saylor and that we're not getting a real read on the market. But if you look at Saylor, the Saylor buys have started to slow down. The Saylor buy this week was $243 million. That's nothing. Like Josh and Hardis bought more than $243 million last week. And Saylor's basic, and Josh and Hardis bought $243 million this week. They didn't even tweet about it. Saylor bought $243 million. He tweeted about it twice. He's like, oh, there's not enough dots on the Saylor tracker. You know what they need to do, bro? They need to do a Josh and Hardis tracker. Can you imagine like a crypto legends tracker, bro? Anyway, what you can see here, on a serious note, we shouldn't be joking on a day like this. It's a market. We're in the midst of a market crash, and here we are joking, bro. What's happened to us? Anyway, you can see that the Saylor buys have slowed down. Like there was just look at these buys: 4.7 billion, 5 billion, 1.3 million, 1.3 billion. 1.9 billion, 1.4 billion, 500 million, 194 million, 97. Bro, it's going to go to zero. Carries on like it's going to go to zero. Next week, Saylor going to be tweeting. Last week, MicroStrategy bought 1 Bitcoin, average price 89,000, total spend 89,000. I've been warning you guys that this is going to happen, that Saylor's holding up this market. Now, the thing that you need to understand about traditional investors, right? Even though, like they call them Wall Street, they're not very sophisticated, right? They're not like very smart. When they get scared, they sell. And they are basically like retail. And so now what you can see is that no one actually wants Saylor's Bitcoin anymore because the market's not going up. You know when they will want the Bitcoin? When the price starts going up again, they will fuel the fire of the market actually going up. Although I must say, I did see something. Well, at this stage, before we talk about, I did actually see something which I think we missed last week. But I think it actually might be worth talking about. So, hear me out, and tell me what you think. Tell me what you think, right? So you got Mark Zuckerberg doing this whole like revolution, right? Like this, the Mark Zuckerberg revolution. The guy was the most woke Democrat, basically kicked Trump off Meta platforms, was a puppet for Joe Biden and Kamala Harris and whatever else. And then he's like all of a sudden done this resolution. The guy's like curled his hair, wearing necklaces, goes to gym. Now he's like, no, we're doing free speech now on Twitter, on Facebook. There's no more community. The guy's done this whole revolution, right? Don't you think the ultimate revolution for his image would be if Zuck actually adds Bitcoin to its treasury? Now, you do know that Zuck actually has a goat, and the goat's name is actually Bitcoin. Do you know this? So Zuck is actually a Bitcoin fan. No jokes, he is a Bitcoin fan. I wouldn't be surprised if he owns a few. What is the name of Zuck's goat? He's got 2 goats. One of them is Bitcoin. No, man, Zuckerberg. What is the name of Zuckerberg's goat? I promise you, he's got 2 goats. Mark Zuckerberg has a goat called Bitcoin. You see? So, don't you think that the ultimate like redemption for him is that he actually is the first company that puts Bitcoin on the balance sheet. He could do it because remember, like, you got to think about who 𝗧𝗏 is. 𝗧𝗏 is like this geek, like this pale skinned geek that probably got bullied a lot at school, and he just wants people to accept him, right? Now he's on this ultimate thing. I do 𝗔𝗖𝗖𝗢𝗧, I fucking, what he does that, like that skateboarding or whatever else they call it, right? He needs this. He wants to fix his image. He's going on podcast with Dana White. He nominated Dana White to his board. He's going on podcast with Joe Rogan, right? 𝗧𝗏 just wants to be cool. One of the coolest things that 𝗧𝗏 can do is to be the first company to actually put Bitcoin on their balance sheet. And I think, if I'm not mistaken, I think 𝗧𝗏 actually runs the whole board of Meta. I think, unlike a whole lot of others, I think that he actually is the whole board. I think he has like enough votes to vote out the whole board. He can basically do whatever the hell he wants. I think that's the case when it comes to Facebook. Let me know if I'm right in the comments, right? Maybe he can be the one to put Bitcoin on the balance sheet. Maybe. Just keep your eyes open for that. Anyway, where was I? Now I digressed. Sorry. Now let's go back to it. So now what everyone's doing is they're saying, don't worry. Everything's going to change when the inauguration happens, right? Everyone's like saying, I saw these tweets. Look here, 420 liquid market. Can we get this guy into the White House already? Babe, you're not broke. You're just waiting for 420, right? It's not 420, it's January 20. Then I keep seeing these things that everyone's waiting until the inauguration. And that on the day of the inauguration, there's going to be like a wand, and Trump's going to come in and the markets are just going to turn and we're going to carry on going. I'd be very, very, very careful of that theory. And the reason why I'd be very careful of that theory is I don't think the market is a forward-looking vehicle. The market knows that Trump is coming in. There's no surprise about the fact that Trump is coming in. Zero surprise about the fact that Trump is coming in. And so right now, I don't think that Trump coming in can surprise the market enough that the market is actually just going to turn. Although I do think that the market bottoms on or around January 20th. In fact, I think maybe, which is a week from now. I think we've got to get these inflation numbers out the way. When the inflation numbers go out the way, I think we get a final nuke. We get the final nuke because we get the final nuke, because that's just what happens. And then we get, I love these tweets. Trump comes in a week, all you have to do is hold. Then the weeks after his inauguration, we pump. I think this guy might be right, but not for the same reasons that he thinks. You will remember that Trump has a lot of promises to the crypto community. He's promised us a strategic reserve. He's promised us a bunch of advisors. He's promised us regulatory changes. He's promised us that he's going to fire Gary Gensler. He's promised us he's going to no CBD. There are a lot of promises for the crypto community. The first promise, Trump doesn't have to fulfill, right?
Day one, I will fire Gary Gensler and appoint a new SEC chairman.
Okay, doesn't have to do it anymore because Gary Gensler, obviously he knew he was going to get chopped. So he resigned. So Trump doesn't have to fire him. It's because Gary Gensler resigned. But it would be epic if he fired him anyway. As he came in, because he's resigning on the 20th. Maybe Trump comes in on the 20th and says, you're fired, and just fires him before he gets resigned. Then that way on his resume is like, he was fired. He resigned, but he's fired. Anyway, I think right now, the most important thing that needs to happen is the following. Trump needs to free 𝗓𝗏 on day one.
On day one, I will commute the sentence of 𝗓𝗏 to a sentence of time served.
So Trump needs to free 𝗓𝗏 on day one, right? If Trump comes in on the 20th and on the 21st he does not free 𝗓𝗏, then I think the crypto community looks at Trump and goes, you made us a whole lot of election promises. You didn't fulfill the first election promise that you actually made us, and therefore we lose trust in you that you're going to fulfill the rest of the election promises. And the crypto community feels completely cheated. It is so important that Trump frees 𝗓𝗏. And I think if Trump frees 𝗓𝗏 on the 20th or 21st of January, if he does that, then I think that the crypto community goes, man, this is a man of his word. He's going to honor he's going to honor all the promises that he makes, and then crypto actually starts running. If Trump doesn't free Ross, let's just say the 20th is Monday. Monday is the inauguration. Say by end of Tuesday, Ross Ulbricht is not freed. Ladies and gentlemen, we then have a problem. We then have the market nuking, because then the market's going to look at Trump and go, you made these promises, you didn't stick to the promises, and now it's a big, big, big problem. For those of you who don't know who Ross Ulbricht is, Ross Ulbricht was the founder of a website called the Silk Road. The Silk Road was probably one of the first websites where you could pay in Bitcoin, because it was like all this shady, they were selling a whole lot of shady things. And so Ross Ulbricht was put into jail. I think he was put into jail for life. Yeah, he was put into jail for life. And Trump promised to pardon him and commute his sentence on the first day. So that is what we're looking for. We're waiting for the Trump inauguration, but I don't think anything's going to happen except a signal to the market. And the signal to the market is going to be that Trump intends to honor his crypto promises. If he does, amazing. If he doesn't, all hell breaks loose. We'll be watching it together. We'll be watching it together. Let's actually see, what does Polymarket, let's just quickly go see what Polymarket has to what is Polymarket saying about Ross Ulbricht? Let's have a look here. Ross, who will Trump pardon? Okay, I mean, yeah, I think that's not the best. Is there any other Ross Ulbricht here? Will Trump pardon Ross Ulbricht in the first couple of days? Let's see. No, nothing yet. Anyway, so that is what we're actually looking for. Now, you have to remember that we do have the inauguration, and you have Trump walking into a very, very, very bad situation. You have Trump walking into high inflation. You have Trump walking into a high dollar. You have Trump walking into high interest rates. It's not a pretty picture. Trump's like walking into a very, 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 what you call like a non-pretty picture, so to speak, right? And so you have to understand that this is not a great thing. Or most people will tell you that it's not a great thing. I'm going to tell you the opposite. I'm going to tell you that's the best thing that could ever happen. And I'll tell you why I think it's the best thing that could ever happen. Because if Trump walked into... The last time Trump walked into power was exactly the same thing. If you look at where the dollar was, the last time Trump walked into power, the dollar topped just before the inauguration. Just before the inauguration. In fact, let me show it to you in a better format. Here's a better format for you. The last time Trump came into power, when he won the election, the dollar started to strengthen and rates started to go up. And when he came in, rates started to go down and the dollar started to weaken. And the reason is, I think this is one of the best things that could ever happen. Because if Trump comes in to a weak dollar, there's no levers for him to actually pull, right? When Trump comes in, at least when he comes in to a strong dollar, he can pull some levers. If he says anything that's going to drop the value of the dollar, what he knows is that that's going to make the markets run. And Trump is all about a scoreboard. Trump is all about getting the markets to run. Trump is all about the vanity metrics. Trump wants the markets to look healthy. Trump wants to leave office and say, when I was in office, the markets had a run. When I was in office, this happened. When I was in office, that happened. Trump walking into a strong dollar is the best gift in the world, because he knows that he can pull those levers to actually weaken the dollar. And as he weakens the dollar, all risk assets are going to go up. People are going to be rich and people are going to be happy. And people are going to say that Trump is the best president in the world. And that's exactly what Trump wants. If Trump was walking into a market where rates were low and the Dixie was low, there'd be nowhere for him to go. You understand, like, dollar's weak. What is he going to weaken the dollar even further? He can't do that. And he appreciates that the problem is that if the dollar is too strong, then the manufacturing that he wants to bring onshore ain't going to happen, because Europeans and Chinese and all the other countries aren't going to buy US manufactured products because the dollar is so strong and they're so expensive. And so while everyone else may tell you that Trump's walking into a bad scenario, I think Trump is walking into the best scenario in the whole world. A scenario where he can reduce interest rates, where he can weaken the dollar, and he can make risk assets run. And I think that that's exactly what's going to happen. And so what we need to see is we need Trump to come in. When Trump comes in, we need him to commute Ross Ulbricht's sentence. And then he needs to start weakening the dollar, which is exactly what he did the last time that he actually happened. And then the markets will actually start running. And so when you hear people say that Trump is walking into a shit show, I think that this shit show may be the best thing that could actually ever happen. So sorry, someone sending me a message here and they tell me that it's quite urgent. No, it's not that urgent. It's not that urgent. Okay. Cool. So that is where we're at. Now, as I said to you, I do think this is the final flash out, the leverage reset, the rates reset before we go on to the next run. And that is the part of the run where Bitcoin goes, in my mind, way above 200. But I mean, let's say a minimum of 200 and maybe we go up to 250. And I said to you that these pullbacks are actually resets. They reset naturally when you look at a pullback. A pullback is resetting emotions from exuberance to fear, right? And the reason why we reset to fear is that so we can rebuild back up again to exuberance and we can start the next part of the run. Now, you may say this time is different, but it can't be. And the reason why it can't be is because I've never, ever seen a market to remain fearful forever. Markets oscillate between fear and greed, fear and greed, fear and greed. You don't believe me? Just go and look at the fear and greed, the crypto fear and greed. Let's see if we can just quickly go here. Every time, I can show it to you again, and I will show it to you again. Crypto fear and greed. Here we go. Every time we get every market cycle, we get the market oscillating between fear and greed, fear and greed, fear and greed. We're finally getting into fear. We're not in fear yet. We touched it last week, but we're finally getting into fear. And so what happens now is we have to appreciate that the market does this to reset our behavior patterns and to make us question what our portfolios actually look like and to make us decide whether those are the portfolios that we want to take with us to the next part of the cycle. Because when we were in the previous part of the cycle, we carried a lot of baggage. We did a whole lot of things that we probably shouldn't have done. We probably put a lot too much money into meme coins and probably chased a whole lot of shiny objects that, like, it's almost like when you go to a club, right? Should I start with these? Okay, so like you go to this club, or let's remove the club example. Let's say you're chasing this girl and she's a shiny object. And then you land up with a girl, but then you realize she's actually not such a shiny object after you've done what you need to do with her. You realize actually it wasn't so great, right? It's happened to you before? Never happened to you before where you've chased the girl and she was like...
Happened, yeah.
Hardest, has it ever happened to you, bro?
Yeah.
Happened a few times, eh? You see, the same thing happens with coins. When you go out, when you're in the bull market, you do a whole lot of things that you, like in hindsight, you look back and you go, I probably shouldn't have done that. I probably shouldn't have done that, right? And that is exactly what... I mean, bro, come on, bro. Josh, it's not the end of the show yet. Calm down. Slow down. It's not the end of the show. We're still doing a good job here. I know you want the show to be over, but it's fine. Okay, so this tweet really resonated with me. It says, when the market panics, it exposes flaws in your portfolio and investment framework. The assets that you may have chased, the risks you may have overlooked, they've now become apparent. But after all of that, you didn't panic. After all of that, you didn't panic or found reason to sell them, then lean into them and load up the truck. And I think this is a very good tweet because it really says the following. We may have had some bad behaviors in the bull market. And it's normal. Even, like I do it, I'm very emotional. But I see, like, we all make mistakes in a bull market. And when the market resets, it is designed to reset our thought patterns and to get us to reset our patterns and load up for the next part of the cycle, providing you survive. And so I think that this is an amazing tweet because what it's saying is, if you survived to this point and you still have conviction in the tokens at this point, and you haven't lost conviction after everything that we've gone through, then those may actually be the tokens that you want to double down on and go into the next part of the bull market. And so I think that you really have to think about this tweet. If you've survived to this point, well done. That's absolutely amazing. Now you need to ask yourself some really tough questions. Is my portfolio the one that I want to take with me going forward? And that is what we're going to talk about tomorrow. Tomorrow we're going to talk about which tokens we want to take with us for the next part and which tokens we're not going to take with us. Like, Like honestly, like when I look at FOG, which I was trying to buy at 40 cents at one point, I didn't buy any. It went from 74 cents, it's down 80%. I don't know if I want to take FOG with me into the next part of the bull market. In fact, I don't know how many meme coins I'm taking with me into the next part of the bull market. Truth is, probably better things to do. One of the tokens that I definitely am taking with me into the bull market, the next part of the bull market, is SUI, right? For me, SUI is one where I, despite everything, I still have a lot of conviction. And the reason why I'm doing that is because SUI are doing all the right things. They've become the third blockchain, so to speak. You got Bitcoin, you got ETH, you got Sol, and now you've got SUI. I mean, some people tell you got XRP because the XRP market cap is like, you see, XRP is like number 3 in market caps. So for me, definitely I'm taking SUI. They're making all the right noises. Most recently, I don't know if you've seen this, but they've got a global accelerator program with a company called GAF Studios. This is, I know the people that are running this accelerator. This is one of the best accelerators in the world. Okay, this is like really one of the best accelerators in the world. If you are a builder and you want to go to the accelerator, just go to their Twitter and do it. I mean, this is not a sponsored post. I'm just saying this is really one of the best accelerator programs in that you have. And so for me, like SUI is one that I'm taking. But tomorrow, what we'll do is we will spend a long time actually talking about which tokens we're taking with us and which tokens we're not taking with us. Remember that your job now is just to survive. You survived the entire bear market. You survived everything. You survived this whole thing over here from 69,000 back to 20,000. You survived the whole chop. All you need to do is just survive for a couple more days. Just a couple more days, a week, maybe 2 weeks. And then we're all ready for the next leg up in the bull market. And I want to see you all here and in class. Now, I have another suggestion for you. This market is very, 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 very brutal, right? It's choppy, it's brutal, it's scary. If you play with leverage now, you're going to get liquidated, or you can get liquidated, especially when CPI comes out, and especially on that day, if Trump doesn't pardon 𝗪𝗏𝗡. Guys, if Trump doesn't pardon 𝗪𝗏𝗡, we are in big trouble. And so my suggestion is maybe stay away from leverage if you're not a very, very, very sophisticated trader. If you do want a different kind of leverage, then I suggest going to Bitfunded. And the reason why I say you should go to Bitfunded. Bitfunded allows you to trade with other people's money. Here's how it works, right? Instead of risking all your cash, you can go to Bitfunded. You pay $99. If you can get 8% in the first round and 5% in the second round, the third round, you're trading with other people's money and you keep 90% of the profits. They keep 10% of the profits, which means that it's probably like to trade a $10,000 account, you need $99. To trade a $100,000 account, you put in $799. This for me is probably the safest way to trade right now. Go and trade with other people's money. In this market, with all this chop, I don't care how good you are, you could get killed. If you want to sign up for Bitfunded, and again, I really, really, really recommend that you do that. Go to Bitfunded. Either just go to Bitfunded's website. Really, really recommend. Either you can just go to the website, which is bitfunded.com, or if you want to support us, and I don't mind if you do, you don't. I really don't. Just go click on Bitfunded over here. Click on Bitfunded, sign up, and go and trade with other people's money so that you don't actually get wrecked. Otherwise, guys, all I need you guys to do is survive. That's it. I promise you, I'll be here every single day, making sure that you guys survive. I'll see you guys again tomorrow. Until then, just survive, my friends.